Yeah, prices, redos, right? Sometimes the lab just gets it wrong as well. They double bill us for things. And if no one's ever going through that, you just don't know. Redos, though, right? Mistakes, errors, things that we need to avoid, we'll raise that. But this, again, is why we use data. Now I can drill back and see what's happening operationally, because this is the effect. This is the output of the input of everything we do. How do we treat the patient? All of this tells us whether we're doing a good or bad job. If we're making a lot of money, that means a lot of patients, one way or another, are coming in and voluntarily paying us and like our service. It may be despite how badly we're doing, though, sometimes. Okay, yeah. I'm pretty close either way, but Travis, do you have anything to add so far? No? Good. Okay.
Well,
Yeah.
can I ask a question?
Please.
While you have a lab goal of 9%, if you do see an uptick in that, that could also be the fact that you're just doing many more crowns than you are
Correct.
doing a filling instead.
Correct.
You know, or you're doing high-end work where you're doing a lot of implants or something else. So the data has to be evaluated for not only the cost, but also the quantity that you're doing.
Yeah.
And because there are some labs in this town that charge $350 a unit
Right.
because, you know, they're the best crowns ever. Well, our patients are, unfortunately, our practices have become somewhat commoditized because a crown's a crown, a dentist on every corner. You know, as a new practice owner, you're going to get the call, you know, how much are your crowns? And they're just fishing for a number because they're going to take that number and go to somebody else and say, well, I can go get this crown done here at this price. How much is it going to be if I come to your practice? So, I mean, this is great analysis, but when you start seeing your price, your fees, I mean, your percentages going up, you have to also look at your revenues. Because maybe your revenues have shot up 20%.
Yep.
You know? And where are you going to see this? First quarter. Why? Why? Where are you going to see it the first quarter? In dental insurance, everybody's waiting for that rollover. So they're going to come and, you know, you're going to start seeing this fluctuation in your, if you torture the data until it confesses and put it in graphical form like this, you'll see it a lot easier than just looking at how much your lab bill is. You know, you can start looking at the, you know, the surges in your practice. You're going to see them maybe in the first quarter and maybe towards the last quarter, and that's where marketing comes in. Do you have any money left over that you haven't used yet? Have you put off a crown that now we can do because we're getting ready to hit that last quarter? So then you got to find out whether or not they pay on prep receipt date and blah, 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 and all that other stuff.
But I love that torture of the data until it, you know, confesses. That's a great way to put it because that's exactly the point is this. Now we're asking these questions because we have data. If not, it's all a guess, right? Like, I don't know. It's great. Okay, so payroll-wise, same sort of thing. We want the goal. You know, it's higher because he's got the associate. This is when he did not have an associate. So pretty good payroll numbers in most of 2017. Marketing's one, again, where if it's too low, I may want to spend more money on marketing. But this also allows me to ask the question of what's my return on investment? You know, what do I mean by marketing? What counts as marketing? So the other way we look at it, right, we've kind of gone over monthly, quarterly. I just want to see on an annual basis, are we growing? Even though this was good Q1 relative to Q1 of 2017, he's on track to do an extra, what, about 120,000 or so maybe in 2018. Is that good or bad? Well, he's got 2 docs in there now, so we're hoping that increases even more. Just seeing your data visually though, right? Visually, I could ask my 5-year-old son, I can tell him blue's good, red's bad. Where's the bad? right? It's so easy. It's great. Revenue and expenses by year. Obviously, I want the blue to be higher, so that's good, but I also just want to see trends. So, I'm giving you a lot of graphs. We don't go through 100 graphs, just like your car. Your dashboard doesn't show you everything, right? You need maybe 8 good things. We've got about 20 graphs that we go over, but we have these calls with our clients each month. But that allows us to then set goals operationally. What are we doing? How do we drill down on this? And again, it's not about a focus on numbers necessarily. It's all the other stuff that produces those numbers that we care about, because then we work backwards to the actual systems in the practice, right? Are we booking continuing care appointments 6 months, 2 weeks out at the time of appointment, right? Are we getting patients in on time? Are we sending them, for example, a new patient email that welcomes them to the practice, that has a map they can click on? Everything we can do to reduce cancellations and no-shows. Are we answering the phone properly? How much time is, how many phone calls are we missing a month? All these kinds of things that we try and track. So for the clients who have multiple offices, we track each of their offices. So this is kind of nice. Each of these is just the individual office, so they can see what they're doing. This is a kind of a newer office where they're just getting a doc in there and it's growing. This is kind of their cash cow office with multiple docs in it. But that's very useful just to see revenue. And then we put those all together. So if you had multiple offices, you could just see total revenue for the year. So just another illustration of that. So with you guys, if you have accountants or you're looking for accountants, this is how we do it. We want to see the goal here, monthly net profit of around 18.5%, and you can kind of see if they're above that, which that's the one time we do want that to be above it, right, when it's net profit. Let me just give you an example as I wrap up, and Travis can take over here, of how we operationalize this for the lead assistants. So the lead assistant, like all the positions, should have very good job description, roles and responsibilities, and metrics they're responsible for. So hygienist, lead hygienist, assistant, lead assistant, your front desk, and their different roles, OM, whatnot. But especially if you have an associate dentist, same sort of thing, average production per day, something like that. So we track that, and in terms of lead assistant, we tell them, here's what your metric is. So it's tracked in the dashboard, strive to hit it each month. We actually send them an email so they know every week where they're at relative to their goal. We tell them how that formula is calculated, so you can either lower the supply cost or increase the collections. We just keep that terminology because that's what they're used to instead of revenue or sales. We walk them through, you're going to receive a sheet, I know this is tiny, that looks like this. And it's going to say here, every vendor you used, right? All the memo or descriptions, how we coded this, and then come back and tell us, is this supply or is it equipment? How much should we break out? Or is it lab? We want to make sure we categorize it properly. But that lead assistant is responsible for both the lab and supply costs. So that's great. Now I've got people that I'm working with as a team, and I'm putting stuff on them instead of I'm shouldering all that weight as a dentist. That's a lot. Imagine you got to be in charge of ordering or supply costs or lab costs. Build up the team, give them some business knowledge, be a little more transparent about it, and accept that they're going to take on that responsibility. And most good team members like that. It's not just about the paycheck. The research shows above and beyond money, there's kind of 3 things that people care about when they're working. Autonomy, so kind of this freedom to not work under constraints or a micromanager, to be able to execute properly. Mastery, so that they can actually master something. They're growing in skill set. It's intrinsically motivating, not just money driven, and just purpose. This kind of glorifies their position in a way. Instead of sucking spit, it's like, no, I'm actually participating in running the business in a way. I'm ordering. This is an operations role, right? I'm involved in kind of the finance side in a way. So this is a good thing for the assistants to be doing, in my opinion. Okay, then we talk just about, this is from their assistant manual. So how do we lower it? Order once or twice a month to reduce shipping costs. Work with other lead assistants. So the benefit of working with Elevate is we can coordinate with multiple offices and they can get some mentorship of here's how this person lowered their supply costs. Or maybe it's time to switch suppliers. Talk to your Elevate Chief Operations Officer or Accounting Officer for ways to reduce them. Work with your OM because maybe your collections ratio is off. Maybe your supply costs are okay, but they're just not collecting up front and that's penalizing you. But again, that gets us to now work as a team to figure out what's going on with the number. Order for 4 to 6 weeks, so don't just, oh, there's a great deal on gloves, let me buy them for the whole year. All that cash is now in gloves instead of in the bank account. Could be good, probably going to kill the metric. So just some takeaways from me, and then Mason, if you want to speak to the cash profit issue here in a minute. So know your numbers within 2 weeks of month end. So from your accountant, in my opinion, you just need to know them within 2 weeks. So say, we come up on the end of May. By June 15th, you should know what May's numbers were. For us, that means fully in the dashboard, so we can see all the graphs and we can compare it. So I was really excited when March ended because now I have Q1 data and we can compare it. And that creates a great phone call and the docs really like that. But don't settle, please don't settle for doing your own numbers. I think it's valuable in the beginning to know everything that's going on in the practice for sure. Don't just turn it over blindly to someone. That's not a good accountant either. But a good accountant, when you're owning your own practice, is worth its weight in gold, in my opinion, because it's going to help identify these things where it's not 3 months ago you lost money. It's like, no, we lost money last month. Here's what we need to do to get things back on track. Know your numbers both in dollar amounts and percentages. Remember percentages because I want to get the ratios to compare to industry benchmarks. Again, I've got these little cards up here so you can have a reminder of where that should be. Every team member has one metric. Standardize your chart of accounts. That basically means group everything into one of those 6 categories: lab, supply, marketing, payroll, OG&A, facility, to one of those 6. Make sure your accountant's classifying expenses accurately. Seems obvious, right? Obviously, an accountant should do that, but that's why we are dental specific, because it's not always obvious. And getting the supply and equipment thing right will typically pay for an accountant alone, just in the depreciation and knowing that sort of stuff. Look at numbers on a monthly, quarterly, and annual basis. Compare them across those time periods. Mason, do you want to speak to the cash maybe? Or Travis?